Given the fact that your company is at least 16 years old, you've probably seen 2 cycles of crisis. What's different between this crisis and the previous?
First of all, we are more prepared. So, as you know, top management of our company, when the crisis approached, we didn't panic like the last time, and we knew, okay, a crisis is coming. Here we have some steps we need to do, and let's identify the opportunity. That was number one. So the experience counts, and I think that experience counts with everyone. So in that game, for us, the difference also here is that this crisis is actually driving the business to us to the core area of the banks, what we service anyway. So actually, for us, that crisis not necessarily hurting us, and we see actually opportunity to sell more now because it's giving the focus on going back to basics of what banks should be doing with the corporates.
Is there a need to reorganize your business to be more in tune with how clients are buying today? Or do you see a need to be more strategically focused in specific areas?
We actually introduced a more flexible model with pricing where we are more open to do revenue sharing models. We sell ASP. Actually, our hosting
what's the take-up like in shared models?
Varies by geography. We are running the largest service bureau for SWIFT out of Switzerland, and Europe is very open for that, and it's been a great business and keep growing. We introduced the same business in the US, in Atlanta, several years back, and it's been actually our highest growing business as well. So there's more and more adaptation, and you can see also a move in the size of the banks that adopt the solution, much more open for that. In Asia Pacific, it varies from country to country. There's still countries that are willing to adopt and some that are not. I think that the reason behind it is really the cost structure, because you need to have expensive operators in order to justify ASP. So in low income countries, cost countries, it makes sense to do it as ASP, because the hardware those days is not that expensive.
Right.
It's operation. So it makes sense in Switzerland, in the US, in Japan, but will make less sense to do it in China unless you also bring the business processing into it.
Right.
So you help them with the business, and then it creates the extra value.
How do you read China in terms of the bank's ability to move into products that you offer, which in turn they can offer their clients? Given the fact that margins are very comfortable in China, and it's still very much of a closed market, and it is a very large market. Some of the institutional players in banking are huge, you know.
Yeah.
So do you see great opportunity? Do you see very tactical opportunities?
Personally, I believe strategically that China is going to become to be like any other country. Right now, the banks are enjoying the shielding of the government from external competition of banks having full license competing in China. But the banks here are at the risk to become what happened, for example, in India, where international banks went into India, and within a very short time frame, they took over a big chunk of the business of the Indian banking.
A big chunk of the corporate cash management business?
Of the corporate cash management, yeah, absolutely. Okay. Because when you come in as HSBC into India with an excellent cash management system, after investment of millions of dollars, very hard for local banks to compete at that level unless they hook up with vendors that also selling internationally. So, and that's exactly the opportunity for us. Going back to China, I think there's like a floodgate to be open soon, where the Chinese banks will not be protected anymore, and they'll have to compete. And we are talking to banks here in China where they want to be ready for that day, and they want to buy software system that will enable them to be at par and compete with the international banks that will be operating in China as any other bank. No one knows when it will happen. Who knows what, maybe Taiwanese banks will be first, but it may happen and very soon. So there is a need, and that's why I believe China is a strategic market for Fundtech, both for payments and for cash management, where corporate cash management here in China is not yet at the same level of use as in other countries, so good opportunity here as well.
I'm sure that in doing business with you, cost is a very important consideration today with the banks. So you've just spoken about the ASP model and the possible take-up rate for that. How else are you talking to banks in terms of managing the cost side of the business?
We have it's very interesting because there are some banks that were not looking to buy anything, and because of the economy, they identified the opportunity and they want to jump into basically they see a window of opportunity and they want to hit the iron when it's hot, and they have no budgets, but they want to buy. So we are offering now a revenue sharing kind of model where they pay only for the implementation services today, and they pay for the license based on transaction, based on clicks moving forward. So in a way, we tie our success with their success, and we allow them to pay for it also in the future when the budget will be there, when the income, so match to the P&L basically, the income. So that's something new we introduced with this economy, but it's also is driven by banks coming in, want to buy, but with no planned budget for it.
Okay. And what percentage of your business today would you say represents this kind of a collaborative model?
It's small. I mean, they still have...
You're just offering it, basically.
We just start offering, so yeah, it's need to...
Give us a sense of what's happening on the global high-value transaction business. I mean, you sell a CLS software, and what's happening on that front?
Yeah, anyway, CLS is an example where, the world is flat. Basically, it really flattened the world from a foreign exchange point of view. And we see similar thing in the global payments arena. Banks became to be international banks without even noticing. I mean, they keep doing acquisitions here and there, and all of a sudden they find themselves as being a domestic bank, an international bank, with 4 or 6 operations running different countries. And in order for them to achieve efficiencies, they now want to run it as one global operation. They may not be a global bank, but maybe they'll be like a small regional bank, or some banks want to be super regional banks. And they now consolidating the operation to run from one location, have the operator sits in lower cost geographies, and run it instead of 6 separate operations into one. So we do see a drive, operational optimization there. While doing it, they benefit also from the ability that you can pay from one country to the other country. Let's say I'm a customer of this bank in those 6 countries. It allows me to move my money transparently as one bank, to look at it as one bank. So we do see this globalization happening even in the smaller banks now.
Gil Gadot, thank you very much.
Thank you very much. Thank you.